If you've watched any trading video in the last 5 years, you know the rule. Top down. Higher time frame first, only take the trade when the trend agrees. One model, every guru, millions of views. It is the closest thing trading YouTube has to a law of physics. So we coded it. No vibes, no redrawing. A mechanical 60-minute trend filter applied to every one of the 190 real trades from our first 2 videos. Trades that agreed with the trend bled. 0 for 14 on the 5-minute. The trades that broke the rule, the ones every mentor tells you to skip, those got paid. Before you flip your charts upside down, the second half of this video is about why that result tried to fool us too. Stay for that part, it's worth more than the rule. First, the boring part that makes this real. Trade with the trend is fuzzy. Fuzzy enough that when it works it was obvious, and when it fails you drew it wrong. Code can't hide like that. Our definition: the direction of the most recent 60-minute structure break. A close above the last confirmed swing high, uptrend. A close below the last confirmed swing low, downtrend. Computed fresh at the moment each trade triggers, using only candles that had already closed. No look ahead, no repainting, no excuses after the fact. Is that the only way to define higher time frame bias? No. It's one honest way, it's the same structure logic our system already uses, and the code is free at the end. If you hate our definition, change one function and run it again. That's the difference between a rule and a slogan. Quick recap. First video, we coded ICT's most famous entry, sweep the liquidity, displacement, fair value gap. 306 triggers across the NASDAQ, S&P and Dow on 3 timeframes, 190 fills, and taken blindly at lost. Second video, I beat the machine by skipping trades. Same deck today, nothing repicked, nothing rerun. We just asked one new question about every trigger. Did the 60-minute trend agree? And the first surprise arrives before a single result. 69% of these setups, 212 out of 306, fire against the 60-minute trend. Of course they do. This entry hunts a liquidity sweep and a reversal. It is a fade by construction. Remember that number, it's going to matter twice. While we were in there, we killed a smaller myth first, the one the comments demanded. You entered at the midpoint of the gap. Real traders enter at the edge. Fine. We ran every trade 3 ways. Limit at the midpoint, limit at the near edge, and a split, half position at each. The edge entry does fill more trades, roughly 7 to 9 percentage points, more fills on every time frame, because price only has to touch the front door instead of reaching the middle of the room. And the money? On the 1 minute, all 3 lose. On the 5 minute, all 3 lose. On the 15 minute, all 3 sit within a hair of break even, midpoint plus 0.03R, edge plus 0.04. The differences are noise. The internet has spent years arguing about the doorway. The doorway was never the problem. Your turn. 2 real trades from the deck, both NASDAQ 5-minute, both textbook sweeps into gaps. This one fires with the 60-minute trend behind it. This one fires against it. Same pattern, same rules. Which one paid 3 seconds? The trend-aligned one got stopped. The rule breaker paid 2R. Now, full disclosure, in writing on screen, we picked those 2. Out of 190 trades, we found a pair that tells the story perfectly, and it took about a minute. Hold on to how convincing that felt. In 4 minutes, that exact trick is the whole point of this video. Now the real test. Every trade, every time frame, no picking. On the 1 minute, trend aligned, loses 0.14 R per trade, and counter loses 2, a little less. Ugly, but fine. The 1 minute was always a knife fight. The 5 minute is where the rule goes to die. Trend aligned trades on the 5 minute went 0, 414. Minus 9.8 R. Every exit style we tested, same result, because not one of them ever reached a target. The counter trend pile on the same time frame. 43 trades, 23% winners, plus 0.2 R per trade. Pool everything, all 3 timeframes, conservative scoring, 2-to-1 exits. With the trend, 63 trades, 9.5% win rate, minus 0.24 R per trade. Against the trend, 127 trades, 18%, plus 0.045. The most repeated rule in retail trading on this sample didn't just fail to help, it pointed the wrong way. So, reverse the rule? Fade the trend? Here's where we show you the trade that Trading YouTube runs on you. While testing all this, our grid search evaluated 324 combinations: entry rule, trend alignment, setup size, exit style time frame, the single best sell, counter trend, narrow gaps, 5-minute 2-to-1 exits, 31% win rate, plus 0.57 R per trade. That is a sellable number. That's a thumbnail. That's a $47 course called Fade the Trend Like a Bank. It's also almost certainly garbage. 13 trades selected after the fact from 324 tries. Run that many cells on pure coin flips and a few will look brilliant. That's not an edge. That's a lottery with extra steps. Our own results file ships with a warning label and we'll put it on screen verbatim. Any best sell must be treated as descriptive, not predictive. 10 of the top 15 cells say counter trend, which sounds like confirmation, until you remember 69% of all the trades are counter trend. The deck was stacked before we looked. When did a win rate screenshot ever come to you wearing its warning label? So what do we actually believe? 3 things hold. 1, this entry is a reversal pattern. Demanding that a reversal agree with the trend mostly selects the moments a fresh trend break is already stretched and due to snapback. The filter and the setup want opposite worlds. 2, on this sample, the alignment filter made a losing entry worse, and that survived every exit style. 3, the headline cure, trade counter trend, is exactly the kind of in-sample mirage we just warned you about, and the with trend pile is small. 14 trades on the 5-minute, 6 on the 15. Small enough that honest people say we don't know yet instead of printing a t-shirt. The defensible conclusion is narrower and more useful. A filter is not a blessing. Trade with the trend did not turn a bad entry into a good one. Here it concentrated the worst of it. If a rule can do that, it has to be tested against your setup, not recited over it. The caveats, kept as always. 3.5 months, 1 stretch of 1 market regime, 1 bias definition, a single structure break that knows nothing about how far the move already ran. A different definition could flip everything, which is exactly why the code is downloadable. Conservative scoring throughout, the optimistic bounds are in the files. These are slices of a system we already searched once, so every number here is descriptive of this sample, nothing more. And none of this tests trend following as a discipline. It tests 1 filter on 1 entry. That's the only claim we're making, and we're making it with receipts. Everything is in the Discord, free. All 190 trades tagged with their 60-minute bias, the pooled results, the 324 cell grid with its warning label intact, and the scripts. Write your own trend definition, you. Moving average, weekly structure, whatever you preach. Run it against the same deck, and post the number. If higher time frame alignment rescues this entry under your rule, show us. We'll feature it. Name attached in the live series. The indicator that finds these setups is linked below. We test. You decide. And the next time someone tells you a trade only counts when the higher time frame agrees, ask them how many times they counted.